Welcome back. Our South African mobile phone operator MTN Group has flagged a half-year loss, blaming a hefty fine in Nigeria and underperformance at home. MTN said on June 10 it had agreed to pay a heavily reduced fine of 330 billion naira, or a third of the initial penalty, in a settlement with Nigeria for missing a deadline to deactivate more than 5 million unregistered SIM cards. MTN, Africa's biggest mobile phone group, said its headline loss is expected to come in a range of 285 cents to 255 cents per share in the 6 months to end June. In total, the net effect of the Nigerian fine on the current period was a negative impact of 474 cents per share. And oil prices slipped after advancing earlier today and the previous day, or as overproduction and large volumes of unsold crude and ample refined products around the world weighed on markets. So what is driving prices of oil this time? Let's talk to research analyst with financial derivatives company, Adim Okwesa. Good afternoon, Adim.
Good afternoon, Chimezi. Pleasure to be here.
Right, so oil price couldn't sustain the momentum. What factors have been driving the market this period? Yesterday we saw the price go up. This morning it was up, but after a while it went down.
Well, we can attribute that to a range of fundamental and technical factors. In regards to fundamental factors, oversupply is back in focus. What drove the markets in April and May was largely due to supply disruptions. But now that we're seeing easing of these supply disruptions, concerns of oversupply are starting to arouse. Nigeria's production is starting to tick up. There's news that Libya might reopen their ports, and of course, wildfires in Canada have dissipated. And also, there's also the demand picture. There's concerns of slowing demand growth, not only in emerging markets, but also in the US, which is unusual for this time of the year. One would have thought that because it's summer, all demand should be increasing, but that's not the situation at this point. And also there are concerns of weak demand, a weak economic outlook. There's also, of course, we have the Brexit situation, which is we still don't know the impact of that yet, and the outlook in China is still uncertain, and also other economies are still lagging in growth. So all these factors are contributing to downward pressure on oil prices.
All right. Now, talking about weak economic growth and oversupply weighing on prices, you did mention Libya planning to ramp up its production. Now, if that happens, what would be the implications for the oil market?
It'll be a very negative impact on the oil market, but there are still several obstacles that need to be resolved, several military, political, and legal obstacles. There's still opposition between faction groups on whether these ports should be reopened. Of course, we have to look at the infrastructure, this oil infrastructure in Libya. There's been no maintenance oil infrastructure for the past 2 years, so the damage to this infrastructure needs to be assessed before oil exploitation can resume. But if they do resume oil production, we might see Libya tripling their production to about 900,000 barrels, which will prolong the rebalancing process, which is bad for oil prices. So in the near term, these bearish factors continue to dominate the market.
So the days when we're going to see oil prices perhaps come up to what it used to be, we're yet to see that happen.
Yeah, one of the thoughts in April and May, people hoped for oil prices to get to as high as $60, but now $37, $35 is looking more of a reality. But there's a sense of optimism that for year end, because there's been a lack of oil investment, and there's been about 20% drop in capex. So that should reduce the flow of new oil coming to the market, which should quicken the process of rebalancing the market. So by 2017 year end, let's say year end, oil price should start heading towards $50, and in 2017 a bit higher.
Okay, now coming back here in Nigeria, we've seen the federal government proposing $42.05 per barrel for 2017. That's for oil price, and then 2.2 million barrels a day in production. Is that feasible?
Oil prices at 42, that is conservative. That is a conservative oil price because I've seen analysts forecast oil to go as high as 70, some say 60, some say 80, but the consensus, I think the magic number is $57 per barrel. At $42, that is a fair oil price, but 2.2 million barrels per day, I think that is over-optimistic. Nigeria has never achieved 2.2 million barrels per day ever in our history. Our budget, the 2016 budget is presumed on 2.2 million barrels, and we're still struggling to pass 1.7. So until the problems in the Niger Delta region are see us reaching 2 million barrels, talk us about 2.2 million barrels.
All right, thank you very much for your time, Adin.
Thank you very much.
Adin Okwesa, research analyst at Financial Derivatives Company. And we'll move on now to Uganda, where the cabinet has agreed to allow the Energy Ministry to grant 3 oil production licenses to France's Total. Commercial crude reserves were discovered in the East African country a decade ago, but production has been repeatedly delayed amid wrangling over taxation and field development strategy. Now, the absence of key infrastructure, such as a crude export pipeline, has also slowed progress to production. According to a statement issued by the President's office, the Cabinet approved a request from the Minister of Energy to allow the issue of 3 petroleum production licenses to Total. And Ghana's 2023 Eurobond has risen to the highest in nearly a week after the government pulled a planned 5-year amortizing bond issue that was expected to be launched in the coming days. The country's 2023 issue gained 0.895 cents to 88.855 cents in the dollar, the highest since last Wednesday. The 2026 bond also added 0.225 cents to trade at 87.1 cents. The country had planned to issue an amortizing bond with a weighted average life of 5 years, but in a statement, Ghana said it will continue to monitor markets in the context of a potential new issue, meaning a new deal was not imminent. Now let's get back here in Nigeria and see how the Naira is doing today at the interbank foreign exchange market. Olaleko Obola, FX dealer at Wema Bank, joins me now. Good afternoon, Leko.
Good afternoon.
So how is the Naira behaving today versus the dollar?
Well, so far we have seen an illiquid FX market with few deals just like we saw yesterday. The FX spot market opened this morning at 318 to a dollar. Later it then dropped to 311.56 to a dollar. We're yet to see CBN in the market. The CBN, as we all know, is a major liquidity provider in that market. We are yet to see them today. The USD in the parallel market is presently trading at 398. That's very close to 400. The OTCFX futures market, we also witnessed some few trades basically on 3 maturities. That's November 2016, May 2017, and June 2017. Outlook, we expect this trend to continue until there is an increased supply into the market.
All right, thank you very much for that update, Leko. Olaleko Obola, FX dealer at Wema Bank. We'll take a quick break now. When we return, we'll look at the activities at the fixed income market. Do stay with us.